Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for Monday and Domestic Economic Data Roadmap for Monday, the 23rd of May through Friday, the 27th of May, 16. Wow, I wish. 3 years younger. We survived a Friday the 13th and now a Friday of options expiration. Both days were good for us. It's been a good week in the markets. Here's a look at the ES front month futures contract. We swept the lows of the last couple of months, didn't quite hold for a close there on Thursday. Friday was largely uneventful. Not surprising for options expiration. I didn't think we are going to necessarily break down right now, but we certainly are near the lows since the 13 sell signal, and we could get obviously a move still to the downside, in my opinion here. The sell signal is still fully in play. It would take something pretty decent, I think, news-wise, to get us to pop back up right now. This does, let's see, did this give us 6 bars? Here's 6 bars down, but I think if we closed here on Monday, closed even for the day, it would erase that count as well, which means we'd still have a full setup for downward movement. Anyways, for those of you who understand the signal, there's some room there. Let's take a look at all the stuff we usually watch. Here's a look at crude oil, all the way back up to $48.40. So it's climbed back up to the highs of the last, basically up to the highs since September, August. Here's gold, down $2.50. S&P closed up 12.28. There was a gap that did not fill on both sides. We'll take a look at that. And then NDX 100 up 47.32. SOX up $20 and 20.34. Cup and handle formation on the SOX. Biotech's up 55.99. Still near the lows of the year, though. The VIX dropped $1.13 to 15.20. Still near the highs of the last few months. Again, a slow day on Friday as expected for options expiration. The trend closed at 1.39, gives us a 10-day moving average of 1.15. NASDAQ volume 1.8 billion. I will tell you that while that's the best of the week, that is absolutely horrible for an options expiration Friday. If you look at a lot of these dots that are well above the pack here, they are often the option expiration Fridays. Certainly on the triple expirations in March, June, September, December, but I mean, usually there's just more volume on it, so that was really pathetic. Advanced decline ratio on the NASDAQ was 1506 on Friday, plus 1862 on the New York on Friday. Google gained $6.40. Apple up just over a dollar, climbing back to 95. So it has not held the breakdown that it made there, which is interesting. Probably what's saving the market at this point. Amazon up $4.28. Netflix up $2.94. All right, let's take a look at the intra-day action for the week, day by day. 10-minute candles. You can see the Monday we had basically a flat opening. We ran up. We get a 13 sell signal at the high. Look at this. How the market was in sync with the signals this week. You get a 13 sell signal at the high on Monday. That's actually the high of the week to the candle. Tuesday morning, and then you sold off a little bit Monday late. Tuesday morning, you did fill the gap early, but you ended up down at the open and then kept going lower. A 13 buy signal late in the day came back up a little. Wednesday morning, you gapped down a little, immediately head up to fill the gap and close, tried to go higher, and then the FOMC minutes came out. Notice that 13 buy signal, though, was good for quite a while. Then the minutes come out, that slams the market, and then they bring it back and close it even for the day. Thursday, you gap down and try to make a move up, but can't. Head lower, slowly climb out of it in the afternoon. Did not fill the gap, but then you fill it by gapping up Friday, and we never filled that gap. So the only gap from the whole week that's not filled is the Thursday to Friday close back near 2040, 2038, maybe 2039. So that's something to watch out for. But everything else filled, and those 213 signals were right on the numbers. Pretty interesting. Here's a look at the NASDAQ. Not as perfect with the signals. Didn't get to a 13 on Friday. Still, the only gap here is the one on Friday. The general move is the same. All right, so what do we have to look forward to in the week ahead? Well, let's take a look at the news that's coming out here in the U.S. Boom. So we've got Empire Manufacturing. Oh, I'm sorry. That's this week. Let's go to next week. That's better. So Monday is the 23rd. No data. Tuesday, new home sales. Wednesday, MBA mortgage index, international trade in goods advanced. That's a new number. FA housing price index, crude oil inventories. Thursday, the weekly initial and continuing jobless claims numbers, durable orders, pending home sales, the weekly natty gas number, and Friday, the second look at GDP for the first quarter along with Michigan sentiment. It's a pretty light week. None of these are really big numbers like you usually expect to see. So we will just trade it as it is. Hope volume picks up now that we're past expiration. It's a good time of year usually still for trading this and into June for a bit until things slow down for summer, maybe sometimes. But volume has not been tremendous, so we've had to really be picky and selective, and we've done, I think, a good job of it. Charts, as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week in stocks and futures.